Good evening, everyone. This is Benjamin Clark with Bridgeton Group, and I'm here this evening to bring another quick trading group, this time on mini and micro futures trading, and give a little bit of an introduction to that, as well as how to kind of utilize your trading platforms that you have available to make it as easy as possible. And it's a great way to start to learn how to participate using smaller and less leverage contracts. To get started, I am just going to read a quick disclaimer. Futures options on futures and forex trading involve substantial risk and is not appropriate for all investors. You should therefore carefully consider, based on your current financial status, whether such trading is suitable for you. The high degree of leverage that is often attainable in commodity trading can work both for and against you. The use of leverage can lead to gains as well as large losses. Past results are not indicative of future results. Online trading has inherent risk due to system response and access times that can vary due to market conditions, system performance, volume, and other factors. A trader should understand these and additional risks before trading. Closed up, and we'll get started here. All right, so again, today we're going to be introducing micro and mini futures trading. If you're new to futures trading in its entirety, there's going to be better primer videos and other things you might want to start out with beforehand. But assuming you have a basic understanding of the futures markets, this is a trading group and webinar that you can jump right into. What we're going to be doing first is I'll just quickly explain why they are available. Mini and micro futures are really smaller versions of the underlying or the major futures contract. And what they do is they basically allow you to participate in the market just using less leverage. There is no, when they talk about mini and micros, there's not necessarily a standard increment, because when I'm going to talk about mini grains, they're going to be a fifth of a futures contract, and I might talk about mini crude oil, and it might be a half of a futures contract. So the amount of leverage these contracts offer does vary, and we're going to go into each one, and I'm going to first kind of explain to you how to build out your quote board with these mini and micro contracts. We'll go over the ones that are available for you to trade today, and then we're going to do just maybe a little bit of practice trading using our Oak program, as well as our premium Apex trading platform for our traders that use that as well. All right, to get started, what we're going to do here, this is our Oak quote board. If you are to get here, and again, all trading clients for Bridgeton do have this available to them. This is the Oak desktop platform. It's accessible through your Internet Explorer right here. And if you see right here, oaktradingsystems.com or oaktrading.com is the website you want to go to. And then if you go to that website and then launch Oak Desktop, again, you do have to be using Internet Explorer to get this to load up. And then you're going to use your username and password. If you have not been provided a username and password before, or you're having problems getting into the program, do call the desk or email the desk and we'll get you set up. I do have a team available at the office to give one-on-one walkthroughs. If you're looking for more help than you're going to get here today on the platform, they're available during the normal business hours. Again, those are one-on-one walkthroughs, so it'll be from 30 minutes to an hour or so, and you can get all your questions in at that time. So this is where you're going to go to launch Oak Desktop. Now, assuming you've logged in, this is going to be what your kind of screen's going to be looking like. We have a standard quote board. Then you can always pull up your account by going to View, and then pulling up your account tab. It took a second to load there. And this will give you balances for your account, okay? So in whatever positions you might have in your account as well. Again, that's connected to your live account. And anything you do in this Oak platform is going to be directly connected to your account. Okay, so there is no paper trading platform here. So, before you come in here and start clicking away, do make sure you get some instruction or make sure you're pretty comfortable. What I'm going to do first is I'm actually just going to kind of build out a quote board with our mini contracts that are available to us, mini and micros. and we're going to go over what the symbols are. And how to find them if you don't know what they are. So one of the popular mini contracts that traders like to utilize will start out in the grains. Okay, each of the three major grain markets, corn, wheat, and soybeans, all have mini futures contracts. Each of those contracts are for 1/5 of the regular contract. Okay, so essentially that means 5 mini contracts is equivalent to one of the full-size futures contracts. Okay, so I'm going to first build a quote board for corn. Will be the first one I do. Now I can go add a contract. Now I can put the symbol in directly, and if you're having trouble with the symbols, there is an oak symbol guide that we do have available electronically in PDF form if you'd like that, or you can just go in here and click build. We can type in corn. And there, it's going to come up with our mini contract right here. Now, there is still pit contracts available that you're going to see on some of these symbol choices, and this goes for the full-size markets as well. You're generally, 9 times out of 10, or unless really you're looking for something specific, you're going to be wanting to look at the electronic market of most of these contracts. Markets are traded, almost around the clock these days, and the electronic markets are the ones you want to be looking at. They're going to give you, and also when you're studying charts too, they're going to give you the cleanest charts. So we're going to want to go to use the XC symbol for mini corn here, and then I can just go right in and I can go to September. Okay, so XCU3, XC is is the symbol for mini corn, U is for September, and 3 is for 2013. I'm going to click right in there. So that's my mini corn contract. All right. Now the symbols are going to be similar for wheat as well. So it's going to be XW U13 or U3. That's my mini wheat contract for September. And XS U3. All right, well, why didn't that come up? Well, you'd think XC U3 and XW U3, C for corn, W for wheat, S, which should be for soybeans, but actually it's not. I believe it might be XK. So what I can do if I'm not sure, it is XK right here, mini soybean CBT. And I'm going to actually look at November. That's our primary month for soybeans right now for the new crop. Okay, so I just put up mini contracts for each of the major grain minis. Again, they're 1/5 or for 1,000 bushels instead of 5,000. All right. Now, when I'm doing my analysis on mini and micros, a question I get a lot, and some of you on this call today have even asked this, well, should I look at the charts for the mini contracts? No. The answer is you should focus. These are smaller versions of the major contract, in this case corn. So you see U3. That's your full-size contract right there. Now, the prices are not going to be exactly the same, okay, because they technically are separate markets. If I have 5 say I'm long 5 mini corn in September, okay, which is equivalent of being long 1 full-size corn, and I'm also short 1 full-size September corn, okay, they're not going to offset, okay. It is a separate contract. All right, so keep that in mind. So 5 contracts on your statement and within your account, it's not going to offset, okay. You still, if you buy 5 September mini corn, you still have to sell 5 September mini corn to get out of that contract. Okay, so even if you have the equivalent number, you can't offset it with a full-size contract. Keep that in mind. Okay, the other thing, like I was just saying here, they're not going to be exactly the same price, but you should still track and do your research based on the full-size contract. Okay, so if I'm looking at corn, I want to go look at whatever chart program you use, whether it's the one on ADMIS, okay, or you use a chart program here like Apex, and I just want to go to, here's ZC U13, my September corn, and I just want to pull it up here. This is where I want to be focusing on, and because this is really telling me what the market's doing. I'm going to be trading the mini corn for less leverage. Okay. Now, you do it. So another thing you have to keep in mind, with that said, is you might have slightly different prices because of liquidity, in the mini contracts. Mini contracts do not have as much liquidity as the full-size contracts. All right, we'll just give you an example. Staying with corn. Now, and I'll come back to Apex, and we'll do the Apex symbol as well toward the end. EXCU 13 is our mini corn symbol there, okay, for Apex. And then still ZC is our main symbol. Okay, so just since we closed this afternoon, we've had 1,687 contracts traded, okay, in the main contract, and just 8 contracts traded in the mini. Okay. Now you might say, well, that's too little. Well, not necessarily. This is typically not the time that grains trade. Okay. So and also the less leverage means you generally shouldn't be using these contracts if you're risking 1 or 2 or 3 cents or something. You really have to micromanage. This is not the right thing to do. Okay. This is to allow you to put on a position give yourself a reasonable stop and let this position try to work for you, because it is a smaller contract. Okay, every cent that corn moves, a full-size future is $50, okay, per cent, and that is a fifth, okay, or $12.50. All right, so it's a much smaller contract. So you don't want to be using necessarily super tight stops. So that's why the volume is not, this isn't saying you shouldn't trade it. Okay, now in a normal full day, okay, you're going to have some volume, okay, and you still want to be able to use stops, okay, but you don't want to be, if you this is not the kind of thing where you want to buy in at the market and risk 3 cents, okay, because during, especially in overnight hours, you do have lower volumes, and this goes with a lot of other contracts. You're going to have lower volumes, and you might get stopped out if your stop's right on the market, okay? Just because you have little less volume and wider bids and offers. All right, does that make sense to everyone? Is there any questions on that before I move forward?
No, I understand it.
Okay. All right, so that's something. So I could have a low, for instance, just to stay on this point, I can have a low in September corn here, okay? Say my low here is 572.5, okay, as it's shown right here on the screen. Might be a little small. All right. Let's see if I can make this bigger for you. So 572.5 could be my low. Now, I could have a different low in my mini contract. Okay, I might have a lower low or a high. Actually, it may not even have gotten down that far. Okay, so keep in mind that if you have a stop in at 572, and you saw it triggered on the full size, you may not necessarily be triggered on your mini contract. And there could be other situations where your stop was triggered in the mini, okay, and and then it wasn't actually triggered on the full size. That does happen from time to time. That is part of dealing with it. Okay, so if that happens, you might have to, want to reevaluate the market. You might want to jump back in real quick. But, that is something you deal with in less liquid markets and in the mini and micros. Okay, but again, that's why you're not utilizing these things for really tight risk parameters. These are going to be, you want to utilize the minis as more position trades, give yourself the ability to paper trade, and, take advantage of longer trends. Okay, with less leverage. All right, so we're going to jump back over here. to our quote board. Now, just like this, September is one. Now, another important factor, again, dealing kind of with liquidity is, especially in the back months, you're not going to be very liquid, okay? You know, the mini contracts are going to be ideal for trading the primary months. Now, right now, September and December corn are very actively traded, so they're not too far out. But if I was looking at March corn of next year, the liquidity there would be too light to trade in the mini contract. All right? So if you have a question on this, is something too light to trade, that's a good question. Just call in and to verify beforehand. Okay. Now, I can also see the price ladder. I can see the bids and offers. It's going to load up here. Apex is or Oak's being a little slow. There it goes. See, right now we're very light. Okay. But I do have a bid and an offer in. I have a buy at 5 at 571 and 5/8, and I have a sell at 573 and an 8. Okay, so this is where I'm on my waterfall here, and I can see where my next available buyers and sellers are. If I'm to buy September corn, and this is just a basic kind of trading educational hint, if I'm going to buy at the market, I'm going to be filled at the first available seller right here at 573, and if I'm going to sell the market, I'm going to go down to the first available buyer to match my trade, now at 571 and a half. Okay, that's why I know I'm going to get filled. And this waterfall, when you click on it, it's going to give you an example of kind of, you know, more liquid markets than less liquid. This right now, again, because this is nighttime, this is not a very liquid market. You're see this would be a lot more populated during the day, you know, as opposed to. Oh, we got someone to call. Oh, I got him muted. Okay. Again, everyone, if you're listening at home, this is a trading group. I have other live traders on, so I do kind of leave their microphones on to let them ask questions, and I'll put them back on in a second. But we're going to look at an actively traded contract like the E-mini S&P. We'll pull that up here. Now there is an example of a pretty liquid market. Okay, I got, well, not pretty liquid, one of the most liquid markets in the world. Okay, I have not even a gap between the buyer and the seller even at this hour. Okay, and I have huge size at every tick on both sides of the board. Okay, so this is example of extremely liquid market. You know, we can go back here, and now we're not, you know, this is an example of a less liquid market. Now, when you do your Oak one-on-one webinars, we do try to help you and teach you how to build up your quote board. So, you know, maybe you're following a couple mini contracts. I'll put up the December corn here, XCZ3. There's my December. Okay, so I can look at both of those depending on which one I want to trade. All right, and for wheat, these are the probably I have September. I probably could look at December wheat, and you know November corn is probably as far out as I want to look. Okay, now if I start looking at March soybeans or something like that, it's probably too far out to look at a mini. So if you have questions, you can always jump into a waterfall to see what the bids and offers look like and see if it's a liquid market. You can check your volume and open interest. Okay, or just the easiest thing to do is call in. So we're going to move on from the grains. We're going to jump into two of the big energy contracts. We're going to look at crude oil, which has a mini, and natural gas, which has a fairly liquid mini as well. Real quick, everyone, I'm going to just unmute everybody. Is any questions before we move on here?
Nope.
We good? Okay. All right, so we're going to jump into crude oil. I believe we're going to be QM. I'll look at August. All right, so mini crude oil symbol is QM. Okay, the full size symbol is CL on OPE. So the same contract in the full size. All right, now you're gonna say, what's the big difference there? All right, well, I have a half tick on the mini contract. Okay, it actually trades in slightly different increments than the full size. Okay, here we trade every penny, 95.52, 95.53, 95.54. Here we're going to trade 95.47 half, but then we're going to trade 95.50. So we're going to trade every 2.5 here. Okay? So it's slightly different increments. So you have 95.52.5. So you're seeing you're going to trade every quarter, okay, on the way down. Or rather 2.5 cents instead of every cent on the mini. Okay, so that's an important thing if you're placing your own orders, something to realize. Okay, if you go to place an order, okay, in the mini contract in crude oil at 95.48, it's not going to let you. Okay, it'll reject. Oh, and I'm looking at my question screen here, guys. I do also have a question screen on the chat box if you want to, because I do have you muted right now. If you guys want to use that to communicate with me or ask quick questions, feel free to use that. Saw you there, John. So thanks for reminding me that we have that tool available. All right, so now mini crude oil, you can probably look at your first two contracts, which would be August. I believe August and Sep. I can always go here on my Apex. Give me a little reminder. Yeah, August and September are your primary two minis. And if you have Apex, again, it is our premium service. It's charged directly to your accounts, $49.95 a month. These have quote boards built in for a lot of the markets, and it's kind of automatically updated. So I have July, Sep, and D's corn all up. I don't have my mini contracts, but yeah, I have my primary markets all up on these screens, and I have different tabs. Here, I can always go here to see what your major months are for some of my mini contracts. In this case, mini crude oil. All right. In some cases, in Apex and Oak, the symbols are the same. Some cases they're different. So I could look at our August mini crude here, or I could look at my September. QM is my symbol. U for September 3, and there's my September mini crude. Okay, unchanged. Now, the other contract I want now, well, before I go to natural gas, mini crude oil is a half of a contract. So of the minis, it's one of the biggest and probably the most volatile of the mini contracts. Okay. For every dollar of crude oil, a mini contract is still $500. Okay, and with volatility the way it's been of late, you can still have a great deal. This is still giving you a heavy amount of leverage in the market. Okay. Now, because it's a half, it's probably a little bit more liquid than some of the other contracts, okay, as well. But it is going to let you participate in direct crude oil trading at half leverage, all right? So 50 cents in crude oil is now $250, okay, rather than 500. So it will allow you to participate. The big difference there between the two is the 2.5 cent increments versus the every cent. So now we're going to pull up our mini natural gas, QG. QG is our symbol for mini natural gas. if you haven't read this before or haven't had a tutorial of open, high, low, last, and the triangle is change, okay, if you're reading the quote symbol here. I can always change my view. I can right-click on my quote board. I can go to view, and I can go by row, which will give you a slightly more traditional quote screen look. Also give you a couple more figures, and I'll stay in this view going forward. Also, I can actually customize this a little bit, and I also have my bid and offer quantities here too. So, for a lot of you, I would probably recommend this row view. Again, right-click, go to view, go to row. Okay. Now, after you make changes to your quote board, make sure you do save it to your computer. Make sure you do that. All right. So, just going back, there's my QG. And I have a fairly liquid contract. I have 20 on the bid at $3.73.5, and I have 3 currently on the offer at $3.74 even. Now, my main symbol for natural gas is NG. I'm going to go to Q3 here. I believe, and I'm not completely sure, but I believe this does have a half tick increment in natural gas. Okay, so here I can have 374.3. Up here I cannot. I can have fives and evens. Okay, so I can have $3.75 even, or I can have 3.75 cents, but I can't have 374.3 or 3.75.7. Okay, so so if I try to place an order, okay, I want to buy at a limit at 374.3, and I do that in my mini contract, it's not going to go in. All right. I should also bring to your attention, just like we also have this same thing in our grains. Okay, you'll notice up here I have 676 in 3/8. Okay, for my wheat contract. Well, if you know, the main wheat contract trades in quarters, trades 2, 4, 6, and even. Okay, just to put this in perspective, I'll put them both up on the screen right on top of each other. All right, so here's my mini wheat in September, and here is my full-size wheat. And again, I'm in 8s up here, just like the options trade in 8s. And down here I trade in quarters. Okay. Now, they do that for just because there's less volume. I think that's well, in this case, I think they do it to be more precise for the grains. In the energies, I think they do it because there's less volume, and they want, so they actually take back some of the increments. And the grains are actually adding increments that you can trade, making it more precise, and the energies are making it less precise. Best guess on why they do that. But the main thing is to know some of the intricacies and the differences between the full-size contract and the mini contract if you're going to be placing your own orders. All right. All right, so we've covered our mini grains and mini energy contracts. And on this next row, I'm going to go to mini metals. Again, to get here, I'm just going to remind everyone, I'm right-clicking on a box, add contract, and go to gold. Oh, no, don't go there. Gold. It's going to pull up the available contracts. Now, there's a lot available. The standard contract here is just the GC, okay, for the futures. Now here, it's going to be a little confusing because you're going to notice several mini contracts, okay? If you ever saw this and you weren't really sure what's going on, do call in, okay? In this case, we're actually going to use the YG contract. is the one you want to utilize. So I put my YG, that is August gold. YG is your mini gold contract. This is a third, okay, for 33 ounces, not 100. That means for every $10 in gold, you're looking at $333 of movement rather than 1,000, okay, per contract. By double-clicking on the symbol, I can pull it up on my waterfall here. And I can see even right now we're fairly liquid. Gold's been very, very volatile lately. So even at a third of using a third leverage, this could be a contract that swings a great deal given how volatile gold's been lately. Okay? So, for a lot of people that used to participate in gold in the full-size futures contract, well, gold's moving $20, $30, $40, $50 a day right now. That could have far too much leverage on a full-size contract. Maybe you want to be able to risk $20 in gold, but you don't want to risk $2,000. Maybe you need to risk $20 in gold to give yourself a good opportunity to stay in a trade or trade a trend. Well, maybe you don't want to risk $2,000. Well, instead you can cut your risk down to $660. Okay, by using a mini. Again, fairly liquid even right now when we're moving around. Silver, the symbol we're going to use for silver, I believe, is YI. YI for mini silver, U3. Now silver is a fifth of a contract. Gold is a third. Silver is a fifth. That means it's for 1,000 ounces instead of 5,000 ounces. Again, extremely volatile contract. Let's look at these markets just real quickly. All right. So here's the bar. I'm going to pull my cursor. This bar from really was today's trading. 1280 on the close to 1280 on the high. On the low today, 1220, $50. This is another bar. You're looking at on the high. This is from Thursday, June 20th. 1351 and a low of 1275, $75 range. Okay. Let's look at silver real quick. Again, huge moves going really back all the way to, this is April 12th and 15th. Okay, and even just today in silver, you have 1961 on the high, 1838 on the low. Okay, it's over $1.20 of range in a full-size contract that's well over $5,000. Okay, that's very big for one contract. So even on a silver, you're talking about, on a day like today, you're talking about $1,000 risk on a mini. Okay, so while it is a much smaller contract, there's still a lot of leverage. Okay, because of the volatility, or not necessarily a lot of leverage, there could still be a lot of risk. So do factor that in. Just because you're trading a mini or a micro contract doesn't mean these things are risk-free. Okay, sometimes they still, depending on the market environment, can move a great deal. Soybeans, when soybeans is really moving, even at a fifth of a contract, soybeans can, over a course of a couple of days, maybe even move 100 cents. Okay, that's fairly substantial. It's $5,000. Okay, on a full-size contract, that's $1,000 on a mini. Now, corn and wheat aren't going to be that volatile, but something to consider for trading soybeans. Any questions, guys? And hopefully I'm not boring everyone. You can type it in on the chat box. Just want to unmute everyone for a second. Anything going on here?
Nope, you're making perfect sense and you're not boring.
Okay. Hey, Nicole, how you doing?
Okay.
All right, so there's our minis for our metals. Now, the one thing we're going to go into our first micro contract. Hope I know the symbol for micro gold. Let's see if I can come up with it. This is a relative, I just actually talked about this with my clients recently, which is the micro gold, and I hadn't been using some of the micro contracts because I was kind of just wanted to make sure that the volume and liquidity was good, but I was happy to find out that the liquidity in the micro products has been very, very good of late. Okay. And I just put up my symbol for a micro gold. Micro gold is a tenth of a gold contract. Okay. So now we're significantly cutting our leverage down in the micro gold. So even on a $100 move in gold, I am now risking $1,000, not $10,000. On a $10 move in gold, I'm risking $100. This becomes something that, if you want to participate in gold, and a lot of you are interested in gold, this is something, a way to participate and trade the market. Let's check our liquidity. I'm going to double click on the symbol. Again, MGC is our symbol. Q is for August. 3 is for the year. Okay. Again, right now, we're not, this late at night, we're at 8:50 on the East Coast. The little they give us traders to sleep, it's nice that markets aren't really trading right now. They'll pick up far too early anyway. But for a micro contract, we have buyers here at 12. It's moving around a lot. I'm trying to keep up with it. 12.33. I have a seller here at 12.33 half. So we're bouncing around, and there are people that are active. And now this may not be one that you want to leave a tight stop. Say the market closes at 12.25. Okay, in the afternoon, you may not want to leave a stop in at 12.20. Overnight, okay, because you might just get whipped out on the market bouncing around, okay? So, this is not necessarily, if this is something you might want to participate for the day, or it might be one you want to, risk, $30 in gold, okay? I'm going to risk $300 in gold for, and I can put a stop $30 away, okay? So this would be one where you want to do that. Again, this goes back to what I said at the intro. A lot of these are ways to get longer-term positions. It's going to allow you to give yourself a little bit more room and participate in trends, get away from some of the volatility. Because of the lack of liquidity, these are not markets generally where you want very, very tight stops. Okay? Especially, if you close very close to it in the day session when there's a lot of liquidity, you don't want to carry a very tight stop overnight. Something to consider. All right? So I do have a micro gold contract, 1/10, and it's actually more liquid than the mini contract. Okay. Now, currencies. I have two currencies with pretty liquid minis. One is the yen. And the symbol for the mini yen is J7. U3, the most volatile currency of the last 10, 11 years, at least as long as I've been trading. So even at a half, a mini here is a half, much like the crude oil. J7 is the contract. This is liquid. You can use stops. Very similar to the full size. Okay, but this is a currency that's been moving a great deal. So if it's half leverage, it's still fairly risky. Let's look at the full size yen. I'm just going to go into my charts here. All right, we went from late last fall from the 130 range all the way down to sub 97. Okay, and even we had a very sharp correction from 97 up to 106.50 just recently. Okay, a lot of volatility, a lot of movement. Okay, so instead of 1100, I believe it's let's see, my multiplier there's instead of $1,250 per cent. Okay, and by that I mean from, we'll say 102, which we are. I'll try to make this bigger for you. Okay, so from 102 to 103 is $1,250. Okay, I'll be half of that if I'm in a mini. Okay. Now same goes for the euro. Now I gotta pull up what that euro mini is. E7, okay. That's my symbol. There's my mini euro, also very liquid. Okay. Now, as I double click on these and I pull them up my waterfall, I can come here and look. I can access them fairly quickly. Now, my waterfall might start to get a little bit overrun, so I might just kind of want to minimize some of them and close some. Okay. I can right click on these little tabs. I can right click on them and close them down. Okay, if I need to. All right, so those are my two liquid mini contracts. Both are a half, okay? Again, instead of the $1,250 per cent, I'm looking at the $625, okay, for a half. Now, those are my only two really liquid that I would recommend trading. There are other minis out there, but these are the two liquid ones. I probably wouldn't recommend the other ones, so I'm not going to jump into those. If you're looking at less leverage for the other contracts, we're going to go into the micros, and I'm going to go ahead and put all the symbols up. All right, now some of these symbols vary. Let's see, M. No, that wasn't it. All right, for the euro, my symbol is M6E U3. This is a tenth. On all my micros, just like my micro gold, are a tenth. Okay. Minis sizes varies. My micros are all a tenth. Okay, there's my euro. All right, MJY is my, and then MJY is my symbol. U3 is my month and year for my yen. Now they have, just so you know, they have the decimalization wrong here, so I actually might talk to them about getting that fixed. This should actually look similar to just the your standard yen. Okay, so I'll talk to them about getting that fixed up. We'll go to the Aussie. Okay, M6A is my mini Australian dollar. Been a very, very volatile contract of late, because it's very tied into China. It was very stable for a while, and then when it broke through 100, it just kept running. So you have a fair amount of movement there. Now, there's a different contract size than the yen and the euro. The Aussie is $100 or $1,000 per cent, so from 92 to 93 is $1,000 of your full-size future. Okay, so I'm just looking at $100 for a micro. In my micro yen and euro, I'm looking at $125 per cent. So from 130 to 131, I'm in the euro, that's $125. And from 102 to 103 in the yen, that's $125. We're going to go to Canadian. Again, because you have a lot of heavily influenced and central bank intervention in currencies of late. These have been very volatile. So even on these micros, I mean, they're moving enough to make them very, very viable trading instruments. Okay, my Canadian dollar symbol is MCD. All right. Now, right now we're in September. You're not going to want to trade December. This is for the micros, definitely, especially the microcurrencies. You must be front month. Just as in the full-size futures, you have to be front month. You lose liquidity going back any months on the futures contracts. So definitely be in the front month, September right now, and you actually will hold and trade these all up until like 1 or 2 days when the contracts go from September to December. And it comes at the very end. That's something I would help you out with, or someone from our team would help you out with. All right, then we're going to go to the British pound. M6B is our symbol for the British pound. 62,000, or multiplier 62,500. So you're looking at 600 and I believe $625 per cent here, from 53 to 54. And so you're looking at 62.50 from 153 to 154 in the micro. Okay. Well, it's one of these. It doesn't look. It looks to be MSF is our symbol here. Let's go back. So I believe this is a symbol for, it doesn't look to be very liquid. So this might be a micro that you, no, it's actually just, it looks like it hasn't traded. Okay, that's what it is. Okay, so actually here, so MSF is our symbol for the micro Swiss, and actually the bids and offers are pretty close. Okay, I can buy here at 106.32, and I can sell here at 106.26. Okay, the Swiss franc's the same size as the yen and the euro. Okay, so from 106 to 107 is $1,250. So I'm looking at a tenth of that for my micro. Okay. And I believe that is our, well, we can quickly go into our, these are a little bit more standard, but you do have your mini S&P, your mini Dow Jones, YM. Okay, and you have mini NASDAQ. But the mini contracts there are actually more standard for trading in futures. The full size, those are the electronic contracts. They're very liquid. So this is the mini Dow. There's a $10 Dow that other people trade. The full size contracts are not as liquid as these smaller contracts. So these are the reason I'm not really touching on them all that much is because those are the primary contracts that are traded. Okay. Now you don't have many contracts in some other sectors. That would be nice to have. So we don't have many contracts in bean oil, bean meal, rough rice, oats, any of the meats, any of the softs. Okay, the debt instruments. But it is going to give you a chance in using these mini and micro contracts to, there's plenty of stuff to explore here. The metals, currencies, your 3 primary grains, and energy. That's a lot to look at. All right, and there's for a lot of you, if you're just looking to participate and get back into the markets, hone your technical trading skills, these micro contracts are a great way to start and get involved. Okay, again, do your research on the full-size contracts. Okay, and make your decisions based on what's going on in the full-size contracts. But then you can simply execute within the trading systems, or with the help of me and our trading team. Okay. Now we've went about an hour. I am going to unmute everyone and see if there's any questions. I do not think I'm going to go into spreads. Not going to go into spreads. Oh, Jack, you want to go ahead?
Yes. Excuse me. Did you make a statement about using front months for the micros and for the
minis?
Minis?
Yeah, you want to be in the front months primarily for both. Okay, the currencies especially. Okay, because they're not liquid even 1 month back. Okay, in stuff like right now where corn is trading September and December. It's a weird time of year. You might have liquidity in both, but generally speaking, you need to be trading in the active month. For the mini contracts in crude oil and natural gas and in the grains. Okay, micro's definitely in the front month. It's not something that you're going to want to buy. Like right now, I wouldn't want to buy a March corn mini. Okay,
sure. It's
not going to be liquid. I don't want to buy a December crude oil mini futures. It's not going to be liquid. All right, they're trading the full size contracts. There's plenty of volume there. Not right now in the minis. Okay, so yeah, that's something you do want to hone in on.
Okay, thank you.
You got it. And Nicole, I had to mute you real quick because there's some feedback coming in your line. If you have any questions, just message me in the little chat box. Is there any other questions before we wrap up today? Hoping to get a few.
Not for me. Yeah.
Nothing from you, Art?
No. I think you covered it pretty well.
Okay. Hey, Margie and Al, did you guys have any questions? Because I know, Margie, I know that you trade the minis. I'm not sure if you're on the phone. I don't think you are. I think you're just watching at home. It's okay. Let's see. Steve and Jennifer, did y'all have any questions?
No, I think we understand it so far.
Okay, yeah, it's pretty basic. Again, you can do your research on your main chart programs and just follow the main markets. It's just going to be a way to get different leverage, and now you can. The nice thing here is where you would have had to risk $1,000 before, you might only have to risk $100, and you're still trading. You're getting that experience. You're building your confidence. Okay, you're learning how to trade. Okay, you're learning how to place stop orders, how to do limit orders. Okay, all the basics can still be applied, and this is a nice way to, ramp yourself up. And not to mention, like right now, I mean, those microcurrencies, there's a lot of movement. There's a lot of currency movement right now. This is a great time to be trading micro futures, okay, in the currencies, just because there's a lot of movement. In other periods, you might have a lot less movement, but, you can catch some decent moves here if you're on the right side of a trade, okay? So even at 1/10 of a contract. So it's a nice time to participate. Stuff like the crude oil, it's a bigger contract. The natural gas, I don't think I talked about this, is 1/4 of a contract. Okay, the natural gas, I didn't mention that. So even the natural gas, that means a 10-cent move in natural gas is $250. That's a pretty tradable market for, I think, a lot of traders. That means even on a 20-cent move in natural gas, you're risking $500 on the mini. Okay, natural gas, and if you look at the chart here, you're generally trading staying within a 10-cent range. And on report days, you might get which is Thursday, you might get bigger moves. But that makes gives you the ability to trade the market. For right now, if you thought the market was going to hold these lows put in yesterday or today and Tuesday, buy here in a mini, and I can risk to 360. Okay, now that's a 13-cent risk. All right, so that's about a little over $300. So it's very reasonable. Okay, and here if you're doing the full size futures, if you want to participate, you're risking $1,300. Okay, or you can even risk down here below this gap. Okay, so you can still participate, much less exposure. Okay, you're not going to make as much money either if you catch the move. But, it gives you the ability to participate. No more you have to say, I couldn't participate, the market's too volatile. Now it's going to open up the door for some of this.
That's good.
All
hey,
right.
Ben.
Yes.
Hey, this is Al here. Mark is on another call.
Oh, it's okay. How you doing, Al?
Doing great. Hey, is there a micro or mini on copper?
No. Well, actually, no. I think there might be, but I don't think it's liquid. Let's take a look at it.
Alrighty.
Let's see. I can always. There is even on gasoline. There's minis and some of these others. What I wanted to cover today was the liquid ones and stuff that I've checked out before. Let's go to. Copper's been extremely volatile, of late, and let's take a look. There's a mini contract, so let's see what we have here.
I'll write that down.
QC is our symbol.
Okay. Is that half a contract, half a
You know what? I'd have to double check. I would have to double check. Let's.
Okay.
Great resource for most of the markets, at least your CME group markets, which are pretty much every North American market, with the exception of the softs, coffee, cotton, cocoa, sugar, which are traded on the ICE. Okay. A great resource is the CME Group website. Notice that little Chicago Blackhawk. They're celebrating their Stanley Cup there.
Yeah.
So I can go to products. I can go to metals here, and I can kind of see what's available. There's copper. Now, one of the things about the minis, I think that the gold and silver mini are actually on a different exchange, so I think that might be even the case here for copper. Let me see what I can find out. The main thing here I want to see is how liquid it is. So I'm going to put it into my symbol, see if QC works here on my Apex. Well, I have a bid and offer. It's pretty wide. Okay, it's 304 at 305.2. Okay, now generally a move in a full size contract from 304 to 305 is $250.
Okay.
That's in a full size. So let's take a look here. I don't know if they have any more. There it is. Value 25. So every cent is. Looks like every cent is $125, so that would be a half, okay? So it's a half contract.
Okay.
So just let's compare it to copper real quick, EHG. All right, so look, if you look in here, 304.3, 304.4. So you're just even a tenth of a cent between the buyer and the seller here, okay,
Right.
on the full size. So you're much wider. It does look like you could trade it. Now, what I would probably have to warn here is if silver gets in, is really moving, okay, this is probably not one you could probably have a stop in. Doesn't look like it.
Oh, okay.
Yeah.
So wild ride, huh?
Yes, well, it's tradable. It's just you're gonna, again, much like the other contracts, you're not gonna. This is not gonna be one you can just get in there and buy it at 305 and put a stop in at 304. Okay, you can't do that.
Right.
Okay, it's just too close. You got to give yourself room if you want to play here. And at half a contract, it's still a pretty big contract. Okay.
You have to be positioned in the right place.
Yeah, given how much the market's been moving, especially of late, this would probably be one I'd stay away from. I mean, we've been looking at 10-cent ranges, pretty frequently. So I would be a little careful there in the copper. But we're looking at this chart. I mean, $3 is kind of hanging in there, at least right now. Two failed tests at it. Okay.
Right.
So this would be one I'd probably look at options. And just recent. I mean, to be honest, now I didn't even trade a lot of options in copper until recently.
Right.
Liquidity hadn't been good. It seems to have picked up. It's still not great in the options, and you still have to be pretty open to taking bad fills from time to time. But it's tradable in the options markets. That's where I'd probably play ball. One of the things I didn't really
I'm recovering from my last one.
Oh, okay. Hey, one of the things I didn't really talk about too much in this webinar, just I'll mention, is minis and micros can be used, futures contracts can be used in conjunction with long and short option strategies, okay, to kind of control position size. A lot of you have heard about delta neutral and controlling your delta, whereas a full-size futures contract, any full-size futures contract, when you buy a contract, it represents a delta of plus 100% or plus 1. When you sell a full-size futures contract, it represents a delta of negative 100% or minus 1, okay? Well, depending on how much leverage you have, these minis also represent a certain delta. For instance, in the mini grains, they're a fifth, so they represent 20% delta if you're buying, plus 20, and negative 20% delta if you're selling. So you can, if you've learned about delta with options, and you understand plus and minus deltas of long and short options, you can use minis to control and make very precise deltas. Say you want to create a strategy with a plus 40 delta. That's what you want, okay? You can use a combination of a mini contract or a micro contract and options to create your delta that you want. All right. Now remember, delta, the way you consider it, is very static. It changes by the day, especially when you have options going on. The delta of an option is always changing, but the delta of a mini and micro future is static. So they can be used to create very precise strategies where you want a certain amount of exposure to a market. All right. We can maybe get into that on another time. I'll get into John Callan's questions here. John's question about one of our other trade projection tools that we have available. John, if you give me a call tomorrow, I will go over that with you specifically. I kind of want to keep that as a separate topic. It's on a projection tool that might be available to you. So I will go over that with you if you give me a call at the office tomorrow. Any other questions?
I can't think of anything there, Ben.
All right. Well, thanks for hanging out for about an hour and 20 minutes. I really appreciate it. As always, on behalf of all of Bridgeton, President Stephen, Chris, myself, Jeff, thanks for coming out, and your participation. Hopefully, it's going to encourage and help motivate some other traders who are out there watching this video on a recording. So again, thank you. We're gonna we'll have another one next Wednesday. I want to try to stay consistent on these. These are very easy to do, and I I have actually more people. I have more spots on these things. I'm up to 26 now on these group meetings. So, you know, if you'd like to participate next Wednesday's webinar at 8 o'clock, please just email us or call in, and we'll make sure you get scheduled. Thank y'all, and have a very nice night.